many times you heard someone talking about the stock market being dangerous? As we all know, stocks aren't the safest investment if you don't know exactly what you are investing in. It takes a lot of time to study and understand a company, and a normal person or worker doesn't have that time. So, what is the solution? Index funds, and the best index historically is SP500. So, first of all, what is an index? In finance, a stock index or a stock market index is a financial tool that measures a stock market or a subset of the stock market. The SP500 was founded in 1957 by Standard & Poor's and basically is a bucket of the best 500 US companies in terms of capitalization. For many reasons, it's the most famous index in the American stock market and maybe in the world. There are different symbols to recognize the index, like SPX and .INX. In the SP500, there are big companies like Apple, Meta, Amazon, Tesla, Microsoft, and a lot more. The index, as we said before, has been created by Standard & Poor's in 1957, but its story starts back in 1860. Henry Vernon Poor formed Poor's Publishing and published an investor's guide to the railroad industry. In 1923, Standard Statistics Company began rating mortgage bonds and developed its first index consisting of the 223 stocks of American companies. During time, it has been upgraded and updated. In 1926, in fact, it developed a 90 stocks index daily, and in 1941, Poor's Publishing merged with Standard Statistics Company to form Standard & Poor's. And on Monday, March 4, 1957, the index was expanded to 500 companies and then renamed Standard & Poor's 500 Stock Composite Index. SP500 is one of the most important components of American economy. The index is very famous across the whole world, even because it's a must-have in investors' portfolios. It lowers risks in an investment portfolio and it has a yearly average return of 11.88%, so it's the perfect balance between safety and returns. One of the best reasons it's famous is because of the compound interest this index has in the long run. SP500 is a very nice investment even because it makes investors save a lot of their time. So the SP500 is an index based on capitalization, so the most capitalized is on the top of the leaderboard and the less capitalized is on the bottom. Once the number 501 is more capitalized than the number 500, they swap positions, so logically the index value will keep growing during years. Obviously, like it's happening at the moment, a recession makes the whole market crash and all the company's shares lose value. The total capitalization of a company is the number of public shares multiplied by the price of the stock. So the value of the whole index is based on company's market cap, but each company in the index has a different weight. The weight of a company can be found dividing a company's individual market cap by the whole SP500 market cap. It is well known that the best 6 or 7 companies are almost 50% of the whole index value in terms of weight. When you buy SP500, you are buying a little piece of all the companies inside the index. Important thing, SP500 index can be bought directly. You can buy exchange-traded funds, commonly known as ETFs, which follow the value of the index. Examples of SP500 ETFs are Vanguard ETF and iShares ETF. First of all, a dividend is the distribution of profits by a corporation to its shareholders. When a corporation earns profit or surplus, it is able to pay a portion of the profit as a dividend to shareholders. Well, if you own shares of SP500, it gives you dividends, but what you need to know is that companies are giving you dividends, not the index. So during the year, the semester or the trimester, the 500 stocks you bought by the index matter dividends. You can easily buy SP500 using a stock exchange or an online broker. The best online broker I suggest is the Giro because it's very safe and the process is very fast and it also has low commissions. In my opinion, yes, but you need to have a long-term plan with it. Index funds are very safe in confront of singular stocks. And when you buy SP500, you are basically lowering the risk of your portfolio and booking 100% sure profits in the future. Also, SP500 in the long run gives you compound interest, which is the main gain on the accumulation plan. Now you know what SP500 is and how it works. I think this is one of the best investments you can do for your future. And do you have SP500 in portfolio? Are you thinking to add it? Thank you for watching, like the video, subscribe to the channel to support my videos, and see you in the next one.